In today's episode, we're talking through the IRMAA and how you can do two things to save you potential thousands of dollars in Medicare premiums every year. So stick around. So I brought in our expert, Grayson Blazek, here on what is IRMAA and why does it matter to you?
IRMAA is the income-related monthly adjustment amount, and it's going to impact how much you're paying for Medicare on an ongoing basis. If you find yourself as a single filer with AGI of about $87,000 per year, or as a joint filer of about $174,000 per year, this is really going to impact you, especially as income goes up from there.
Yeah, this could potentially be a $4,000 plus increase in Medicare premiums. So you got to really be careful and understand where you fit into these. And we're going to talk about these steps of how you can adjust. So step one involves planning ahead to manage your income before the end of the year. And it could be one of these 6 strategies here that we have for you. It could be watching your IRA withdrawals or Roth conversions, watching your capital gains and or realizing capital losses, paying attention to tax location. Where are you keeping income producing investments? Are they in your brokerage accounts that's causing your income to be higher than it needs to be? You also have the option to delay Social Security, and this is basically avoiding forced income sources earlier than you need to so that you can stay in a lower tier. Qualified charitable distributions for those that are 70 and above can be an option to reduce income, and then also health savings accounts if you're using a high deductible insurance policy. Now, all of these need to be considered within a multi-year tax picture when you're analyzing and implementing as well. The second step is, what do you do if you find you are impacted by IRMAA?
So there's a waiver process or an appeal you can file with the Social Security Administration, and there's specific events that can occur that allow you to qualify. So this includes marriage or divorce, death of a spouse, retirement, so like work stoppage, or a reduction in hours, loss of a pension, or loss of income producing property. And so if any of those happened in the past year, you can file the waiver because going forward, your income likely is going to be reduced.
And what is that form that we have to file?
That is Form SSA 44. So there's 5 steps to the form that you'll go through and complete, and you'll submit to the Social Security Administration for processing.
And we'll include a link to that in the show notes below or the description below. So let's talk about an example that people are dealing with here.
So an example we come across relatively often, and I think from a meaningful perspective, let's talk through an executive today. Let's say it's a single filer and their income was increased 1 year at retirement as a severance package or a payout that, let's say it was a $300,000 exit compensation. So that, of course, bumped their AGI quite a bit in that 1 year. Mm-hmm. Going forward, though, they're retired, their income is going to be much less, and so they fall below that $87,000 amount we talked about earlier. But because of the one-time spike in income, they can actually file an appeal that says that was a one-time event and I have now retired, and going forward my income is going to be much lower. And by filing the appeal, you have the possibility of reducing your ongoing Medicare premium.
And documentation is really important here, right? Making sure that you include pay stubs, even a signed letter potentially that you retired in that year. So those are 2 steps you can use to potentially bring down your Medicare premium by those $1,000 levels, right, if you're in those upper tiers. So if you like this video, we have others, one in particular on the Social Security tax bubble that we talked about a few episodes ago, and a longer podcast episode that we'll have in the description below that you can check out, and you can subscribe with the button next to us there. Thanks for joining us.